So today we're going to learn about trend trading, and I will show you my favorite ways and tips and tools on how to understand and trade trends. So the basic and price action approach uses high and lows. Is it the best? Probably not. Is it very good to get started, and is it very beginner friendly? I would say so. And what you do is you look at swing points. You look at areas of support and resistance, and you draw your levels or your zones around them, and then you're trying to analyze the price and the trend structure. So let me do this here for what we see on our charts, and then let's go through this. And generally in an uptrend, when we look here at the right side of the chart, what you want to see is that the price is making higher highs and higher lows. As long as the price is making higher highs and higher lows, you're in an uptrend. So this is a high, here's a high, here's a high, here's a high, and then here we have a high. At a point where the price is breaking through a low and makes a new lower low, such as here, we have a low here, and then the price is breaking it here, we would say that the trend is shifting and we're going from an uptrend to a downtrend. But things can be sometimes quite subjective when we look at, for example, here, where we do have a swing low, the price is breaking it. So this could be considered also a signal of a short trend, but obviously the market didn't turn around. So this was a short signal that failed and a failed signal. One thing to keep in mind here is that regardless of which approach we're going to look at in this video, and no matter which approach we are choosing, you will never achieve a system that shows you every single signal correctly. There will be always false signals. And one of the most important skills that you can develop in order to become a profitable trader is to understand and accept that losses are normal. So you have an approach, it works decently well, maybe you have a win rate of 60% and 4 out of 10 trades fail. But if you have a good enough reward to risk ratio, this will make you money long term. And the temptation of the average struggling and losing trader is then to try to go into the system that has a 60% win rate and try to optimize it to have it a 70, 80 or 90% win rate. But most of the time what then happens is that traders break the system and they ruin it by trying to over-optimize, whereas they should have just accepted that there are going to be losses. So that's one thing that I would like to point out here. The next approach, instead of focusing just and drawing highs and lows on your own manually, what we can do is add a high-low indicator. So what we do is we go to indicator and then we just type in yesterday high and low, and then we have a few. They should all pretty much do the same. So let's use the first one here, and we have the indicator on the chart. We might have to adjust the settings here a little bit. So we have yesterday high, low. We don't need to see today's high. We don't need to see today's low. We don't need to see the weekly, monthly, or yearly highs and lows. We can increase that so that we can look back to analyze the charts. Let's make it a little bit thicker so that we can see it better in this video. And what we do have now is a channel on our price action that is plotting the high and the low of yesterday's price action. And what this does is that it really nicely helps you understand where you are in a trending market. For example, in this period here, the price never reached the green area, which means the price never pushed into a daily high and just kept advancing outside of the daily low. And as long as the market is not hitting the daily high, you're in a downtrend. That's very simple, but you can remove a lot of subjectivity that comes from drawing levels yourself. You have then periods where the market is pushing into the daily high, but it's not advancing higher above the daily high. Nothing like what we have seen here, where we've seen extended pushes outside of the out of the daily low in a downtrend. So this is one improvement that you can make very easily. You're in an uptrend, the market is not reaching the daily low, and if it's reaching the daily low, you can see immediate and strong rejections. You never see a period where the market is trading outside of the daily low for an extended period of time, but the market is easily pushing into new daily highs here to advance the price higher. Then when you see something like that, where the price is rolling over and pushing into the daily low for an extended period of time, the trend is over. So really, really great indicator. This is actually an indicator that I use in my trading quite a bit, and I find it very, very helpful. Let's move on to another one, one that probably many of you have heard about and many of you have tried using, but maybe struggle with. So let me help you understand moving averages. So I added the EMA. By default in TradingView, it's the 9 period. I think one of the common ones is the 21 EMA, which many traders use. And the EMA is great. It helps you filter out trends. One of my favorite, all-time favorite trading books is from Marty Schwartz. It's called Pitbull Champion Trader or something along those lines. And he is also, or has used, moving averages in his trading, and he made millions and millions of dollars. So it's a really, really good tool. You can use it as a trend filter. So as long as the price is above the moving average, you're in an uptrend. When the price is trading below the moving average, it can change the trend. But as you will see, that there are also a lot of, I wouldn't say false signals, but there are lots of premature signals. For example, here the market is trading below the moving average, but then continued higher. The price didn't continue higher much, and then afterwards we fell and then traded lower. Here was a time where the price traded around the moving average, which is quite typical in a range environment. So using moving averages works really, really well in trending markets. But as soon as the market enters a range period, moving averages can produce a lot of irritating signals. Let's put it that way. One way of countering that, what I really like to do is when you open the indicator settings, what you can do is under input, you change the time frame. We are on the 2-hour chart now, but I really like to use higher time frame moving averages. So here under calculation time frame, we can change it. If you're on the 2-hour, change it to the 4-hour. I think the higher time frame 4 hours also great when you're on the 1 hour. Really, really nice. And what you can see then is that we are filtering out some of the false signals that otherwise you would have gotten on the lower time frame or a lower indicator setting from the lower time frame. Of course, during ranges that keep going for quite a while, the market will still trade around the moving average, but it's not going to be as severe. And then break and retests through a moving average after a long period of trending, such as here uptrend, break below it, retest, downtrend. We have the same as well here, trade below the moving average, break, retest, and then the trend is changing to the upside. Here we don't have the break and retest, right? We can see that no break and retest, so no trend change. Here you can see that then we have the break and the retest comes a little bit later. So adjusting the moving average for a higher time frame can help you avoid some of the premature signals that will come from using a lower time frame setting or just a very small period setting for your moving averages. But there's more tools that I really like to use instead of the moving average, and it's the pivot point. So you enter pivot, it's called pivot point standard. Then we open the settings. We don't need all the S and R here, so we can get rid of all the S and R lines here. And we only want to remain with the P, which is the central pivot point. I will make it a little bit thicker for you so that you can see it. Pivot point time frame, we are here on the 2-hour, so we could use the daily pivot point, which then gives you a new pivot point every day. I made videos on what the pivot point actually is, but the only thing you need to know really for that is that as long as the pivot point is moving higher, you can see that, and the price is above the pivot point, you're in a trending market. When it changes, such as here, you can see the pivot points are suddenly very, very close together. That's an indication that the market is ranging. But the most important signal is when you have a shift in pivot points, such as here, where you have up until that point, the pivots are always moving higher. And then here you can see it's the first time that you have pivot points that are moving lower. And that's then your trend shift. Here in a range market, of course, just like any trend tool or trend indicator, you will struggle a little bit, but one of the easiest way to overcome that is just not trade in a ranging market and wait for clear signals that a trend is going on. And you can see that here, the pivots are moving lower, the price is below the moving average, below the pivots. And then here's the first time that you have a pivot shift. So here's the first time that you have higher pivots, whereas in the past you had lower pivots always. And then the new uptrend is on its way. Until here, again, that's the range. We have to account for ranges not being tradable. And then here is the first time the pivots change to a bearish structure, lower pivots, and then the market moves to the downside. So pivots and the standard pivot point with a central pivot point are really, really great additions to a trend following arsenal. When we look at indicators, we can also look at the ADX. So just type in ADX and it's called average directional index. And this is how it looks on your charts. For the ADX, there are trend filter lines. So typically what you'll see is that traders have a line of around 30. So the ADX below 30 indicates a ranging market, and an ADX above 30 indicates a trending market. And this then becomes really, really interesting when we just try to understand where are we trending. So from here to here we are trending, right? The market is in an uptrend. The ADX is above 30. Then it falls below 30. Here we have a little bit of trending. Here we have a little bit of trending, right? We can catch the downtrend. The cool thing about the ADX is that here, for example, we have the ADX below 30. And this corresponds to this range here that we are seeing on the price chart, and that we had problems with the moving average and the pivot point and also drawing highs and lows. So by having an ADX on your chart, you could potentially overcome this. When the ADX is below 30, you don't look at your trend tools, you don't look at your indicators that use trending analysis, such as the moving average or the pivots, and then the problems that we previously had are just not there, and you can eliminate them. So when the ADX is below 30, if you're a trend following trader, you will just sit out. Other traders will use different thresholds. So some traders will use 20, which I think is a little bit too aggressive. 35 can also work. It filters out more ranges, obviously, but that's then a little bit up to you, and you can play around with it as well. You could clearly then combine different tools such as the ADX and the pivot points, for example. I would also not recommend to rely on any tool exclusively, even price action. Don't use just one tool or one signal, one criteria to get into a trade. Always try to create a multifaceted and multi-layered trading approach where you have maybe your higher time frame analysis that gives you the trend direction, and then on the lower time frame you look for specific entry patterns. That's how I like to trade, and that's actually how I trade, and that's how I teach my mentees as well. And that works generally quite well. So you're not relying only on one tool, but you're having 2, 3, 4, 5 different signals that you are waiting for, and when they appear on your charts, that's when you get into a trade. And I would highly recommend to explore such an approach if you want to build a very robust approach that will help you filter out trades that are not aligned with your strategy premise, and that will help you find overall good trading opportunities.